These trend channels are one of the most important skills in technical analysis. If you want to enter winning trade one after other, you need to learn how to draw these profitable channels, as they are extremely helpful in showing the trend direction and the breakout. People often make this mistake by drawing a perfect trend line and then hoping that the price is going to respect this trend line. But it doesn't. Instead, it creates these false breakouts and take you out of the trade. In this video, I will show you how to draw these channels automatically. And not only that, the settings of this indicator will also print signals when the trend is about to change its direction. To add this indicator to your chart, head over to TradingView's indicator tab and search Trend Channel by Chart Prime. Once this indicator is added to your chart, you will notice it has automatically plotted these channels for bullish and bearish trends. The channel has two bands, the upper and lower band with green and red color, and the price is respecting those bands. And notice how it is producing various types of signals when the trend changes its direction. Make sure you have applied this setting. Under the Inputs tab, the length should be equal to 8, and the extended lines are unnecessary. So if you want to check them, you will notice that the channels are extended. It is up to you if you want to keep them extended or not. I like to keep it unchecked as it gives me a clear chart. Next we have Styles tab, and over here the first option is Labels. This is a breakout label that I keep it on, and I also keep the line fills. As we already discussed, the price do not respect straight line, and lastly this middle line. You can keep it unchecked. It is just an indication of the price position within this trend channel. Based on this bullish volume signal, we're gonna enter long trade. We are using 1 hour chart, and our take profit will be of 2 stages. We will take partial profit at 1:1 ratio and let the half trade run to hit 1:2 ratio. Or we're gonna immediately exit out of the trade when the opposite signal is produced. This trade did hit 1:2 ratio, and the next trade is also a breakout trade to the upside. As usual for this strategy, we will always book the partial profit. Since the price failed to respect the channel, it produced the opposite signal, which means we have to immediately cut our trade. If you had booked your partial profit, this trade would still be a winner for you. DMV, which means medium volume. So basically when the price broke out of this channel, the volume of trade was medium, which is an indication that there is a relatively medium momentum in price movement at the time of breaking out of this channel. Similarly, LV means low volume and HV is high volume. How to enter a trade on 1 hour chart using 15 minutes entry. The idea of using 15-minute chart for the entry is actually to reduce the distance of stop loss and to bring it around a valid swing high or swing low. On TradingView, click this square icon and it will split the screen into 2 sections. However, if you don't have a pro version, then follow this method. Right click on the TradingView screen and duplicate your trading tab. Then hide the indicator, plus change its time frame to 15 minutes time. It will be a little difficult for you, but you will be able to find nearest swing highs and swing lows. I'm gonna be using a split screen to demonstrate you this 2-frame entry method. So on 1 hour chart, once we have a breakout signal, then we're gonna use 15-minute chart for the entry and place our stop loss nearest swing high. Whereas if we find nearest swing high on 1 hour chart, you can see it is further away. Therefore, 15 minutes chart is a better choice, and as always we will be booking partial profit on the way to 1:2 ratio. And to apply trend following strategy, watch this video.